when you're talking about a mobile home, it is personal property. Now, the distinction is clear for us as professionals, but it's not always that clear for the individual or the buyer who's coming to you looking to apply for a manufactured home loan. So how to distinguish the difference when they come to you, I always told the new LOs, and I told everyone I've ever spoken to, is there's always 4 questions you start out with. So the 4 basic questions are, what year was the home built? So conventional FHA and VA are going to allow homes that were built after June 15, 1976. USDA is a little different. So on purchases, they're looking for a brand new manufactured home, less than a year from manufacturer, and generally speaking, never occupied. Now, they do have a pilot program which is available in 22 states, which will allow for homes that were built after January 1st, 2006. Next question is the home on a permanent foundation? It's important. It has to be affixed to a permanent foundation system, has to be considered real property, has to be taxed as such. Next question, has the home ever been moved? Generally speaking, if the home was ever placed on a location and then moved to a different location, it's not going to be eligible for financing. The only time that will be allowed is in VA in certain situations. But generally speaking, if the home's been moved, it's not going to qualify. And lastly, this is a primary residence or a second home. For the agencies that we deal with, you're only looking at primary and second homes. So primary for all the government, and primary and second homes on the conventional side. Now, at AFR, we do run the gamut with our programs that we allow for manufactured housing. So as you can see, it runs through all of our FHA programs, all of our VA programs for USDA for purchases. And conventional, Fannie and Freddie will allow it for primary and second residences. That said, I'm going to turn this over to Chris Lafferman, our VP of Operations. He's going to get a little more detailed for you.
All right, guys. Manufactured homes. So I want to thank everyone for taking a couple minutes to, hear our presentation today. Everybody on this call at AFR, I'm sure manufactured homes and the communities that are tied to it, represent something very special to us because we've been doing it so long. We've been, working with so many clients and these communities of borrowers, brokers, processors, that, it's really manufactured home is a unique community in itself that, we are very closely tied to. So again, thank you guys. My name is Chris Lafferman. I'm Vice President of Wholesale Operations at AFR. I've been here for 11 years and, a little bit about my career. I'm going to kind of give you the path, and it's funny how my career is going full circle. I got in the mortgage business right out of college in South Central Pennsylvania. So being in South Central Pennsylvania, at that time, going back, over 20 years ago, the mortgage business was very local and regionalized. My area, there were manufactured homes were very prevalent. So in order for my career to get off the ground, I needed to learn manufactured homes. It was necessary for me to be successful. And, and I sat across the table from tons of fantastic families, in manufactured homes. And, it's one of the highlights of my career, how I started. So I love it. I'm very, close, and I have a really good feeling with manufactured homes. Then my career path went all over the place. I worked in Manhattan for a while. I moved to North Jersey probably 16, 17 years ago, where manufactured homes are not as prevalent. So, and I was, did everything on the other side, originator, processor, broker, originator. I came to AFR about 11 years ago, not knowing, and I had done business with AFR, but not knowing that their big niche was, when I started, was government FHA and manufactured homes. So, I always say the universe aligns for a reason, and I was meant to be here, and I sure was meant to be here. Basically, that's how my career, went full circle. So, that knowing that once I got here was just an additional comfort level for me because I had worked so much in manufactured homes prior to. So hopefully at the end of the call today, guys, you are going to have a better understanding, and my presentation and will hopefully help you be the driving force in all your transactions. It'll ensure that you have a much higher possibility of that transaction being as seamless as possible. And it starts with those conversations you're having either at application or prior to, with three areas within the transaction, with three parties within that transaction. The first with the borrower. I mean, it's so important that you guys have a conversation with the borrower and lay out all the possible scenarios, all the possible items that could be needed for that transaction. That borrower is, like Nick mentioned earlier, you know, maybe they know a lot about manufactured homes. Maybe this is their first manufactured home loan. You don't know. So I think you go over everything and all the possible scenarios and all the possible items you should need, you know, and the fees associated with that. So that's the most important thing. Our borrowers are trying to put together a budget for whatever transaction it is, and you guys educating them and giving them all the information possible will really help them along the way. All right. The next conversation you have is with the realtor. Excuse me, guys. All right, the realtor. Basically, you're going to have the same conversation with that realtor. You're going to go over all the requirements, you know, that you're going to go over the fees, but you're really going to approach that conversation from a timeline aspect. So all these items, all these inspections, how they can affect the timeline, because the realtor's main focus is they need that loan to close by the closing date that's on that purchase contract. Very important to them. Couple specific questions that you should ask a realtor up front. You know, is the property in a flood zone? You know, are the exterior HUD labels or the interior compliance cert present at the manufactured home? I mean, so important that you find this information out rather than finding out middle of the transaction. All right, title company. Title company is so important, especially when you have a manufactured home that the mobile home title will be retired at closing. So you want to have a very detailed conversation with your title company, and really you want to gauge their knowledge of manufactured homes to ensure that, you know, they've done manufactured homes before, they know the state requirements, federal requirements, understand all the title endorsements that go along with a manufactured home. So really you want to gauge the title company's knowledge on manufactured homes. You know, I suggest if you have a new title company that's never done a manufactured home, I suggest looking around for a title company, you know, that does manufactured homes, because you don't want to run into any post-closing issues, because again, manufactured home community is very tight-knit, and I promise you, if you do right by a couple families, they will continue to talk about you, and those referrals will keep coming in. All right, let's go to the next screen. All right, first I want to talk about some differences between a manufactured home and a single family when it comes to appraisals and the homeowner's insurance. First with appraisals, I mean, I know you guys are all in the mortgage business and been in for the last, at least the last 8 months, and seeing what's going on in our industry. There are a shortage of appraisers right now. And in the areas where manufactured homes reside, these suburban, maybe, a rural, kind of on the fringe of a rural area, there's even less appraisers available. So these appraisals for manufactured homes are going to cost on average a couple $100 more. And I suggest, disclosing a rush fee on your initial loan estimate. So, an appraisal fee is a zero tolerance fee disclosed in Section A of that loan estimate. And there's not really a valid change of circumstance. No material change happens to a loan that allows you to add a rush fee. So again, I suggest you can always remove it, but I would always include that rush fee in that initial the loan estimate, because it could be the difference of an appraiser taking that order or additional week delay for another appraiser not taking that order and hitting your contract date or not. It's very important. Homeowners insurance. Homeowners insurance is very, very unique to manufactured homes. I like to say it's a manufactured home is insured like a car. So for a regular single family home, the minimum dwelling coverage that we require as a lender is the lower of the cost to rebuild new or the loan amount. Manufactured home is very different. Sometimes you're going to see on a manufactured home with no dwelling coverage whatsoever, and it's just going to have actual cash value. So ACH you're going to see. And that's very common for a manufactured home, because the minimum dwelling coverage that a company can even offer on a homeowner's insurance company can offer on a manufactured home is the value in its current state, which includes depreciation. So it's very common to see an actual cash value policy or a policy that's only going to cover the current value. So my suggestion with homeowners insurance, do your due diligence, do your research, and use a company that's very well versed in manufactured homes, foremost, Farmers, Zurich, etc. These companies are well versed in manufactured homes, and your clients will get the best deal possible out there in the marketplace. All right. Let's talk about a couple of these manufactured home specific items. Whether it's an inspection or a document. Let's start with the HUD data plate performance cert and the HUD cert labels. So in the exterior of a manufactured home, you're going to have one HUD cert label for every section of that manufactured home. So you have a double wide, you're going to have 2 HUD cert labels, triple wide, 3, etc. Those are going to be present on the exterior of the home. The interior of the home is going to have a data plate performance certificate. So again, conversation with the real estate agent prior to you originating this file. You want to ask that real estate agent, are these items present? Because if they're not, you have to place orders for either a verification letter or a duplicate data plate performance certificate from the ibts.org website. All right. So if your exterior HUD labels are missing, you are going to order the HUD label and its verification of the HUD label. You can go to the next page, that's fine. And that's going to be verification of this red HUD data plate at the bottom, the HUD label, I'm sorry. If your performance certificate is missing, you're going to order that duplicate performance certificate from the IBTS as well. And you can go on to the next page. So again, it's better for you to find out from the very beginning whether you're going to need one of these documents, because the costs are going to range from $50 to $150 or $100 to $175. And obviously, if you don't have to put a rush fee on that, the cost is low to the borrower. All right. When you go to the IBTS website, there's going to be all these resources here. It's going to give you 2 different options for the label verification letter or the data plate performance certificate. So it's very self-explanatory on exactly what you're going to need. All right. Sorry, guys. All right. You can go to the next page. All right. Here's an example of the IBTS letter that you're going to receive. Basically, that's going to be verification of the HUD data plate numbers on the file, all the manufacturing information. So all this information is going to be needed by your title company for the, affidavit, the affidavit of affixation. They're going to have to record at closing with your copy of your security instrument, as well as, the manufactured home rider. So you're going to need all this information. If it's not present at the home, this is your verification that you have all that information. All right. Engineer cert. Engineer cert is, you're going to assume on most of your transactions you're going to need an appraisal. Manufactured homes, you're going to need an engineer cert. So if you haven't had if you haven't had an engineer cert done in the last 5 years, assume you're going to need one. The only really exception to that is as a HUD-owned property, you're not going to need an engineer cert. But anything else, you are going to need an engineer cert. What that's going to do is it's going to tell us as the investor that the home meets the permanent foundation guidelines for manufactured home. It's going to make a comment that any additions, modifications don't negatively impact the structure. It's going to have a professional opinion that home has never been moved to another location. And it's going to be sealed. It's going to be state sealed by the state and signed by the engineer. And really, you're going to need that on every single file. So again, conversation in the beginning of the transaction with the borrower, we're going to need an engineer cert. It's going to range from $365 to $1,000. Now we are Heyman Engineering. They're a nationwide company that offers our clients a very good price on an engineer cert. $365 is the link right to our website that'll take you right there, allow you to get that price. And Heyman Engineer does a fantastic job, giving our clients and our consumers all the information required by all the agencies on their engineer certs. We never have to send, engineer certs back to be updated unless the foundation truly didn't meet HUD's guidelines. So here's an example of an engineering cert from Heyman Engineering. Has all the information you need, all the things that, that I just mentioned. All right. Elevation cert. Again, another question to ask your real estate agent from the very beginning. Knowing whether that home is in a flood zone or not is going to determine really where you're going to send that loan, whether it's going to be FHA, USDA, Fannie, Freddie, VA. Because if that home is in a flood zone, the property is ineligible for financing with FHA and USDA. So if you are taking a loan FHA or USDA, and maybe that flood cert comes back that the home is partially in the flood zone, what you're going to have to order is an elevation cert. So it's usually done by an engineer, surveyor. They're on that elevation cert. There's going to be a base flood elevation, and what that elevation cert is going to tell us is whether the dwelling itself, so the manufactured home, is actually elevated outside of the base floodplain or it's actually in the base floodplain. So if a portion of the property is in the floodplain, but the dwelling itself is considered elevated outside the floodplain, that manufactured home is eligible for FHA and USDA financing. But if that manufactured home is within the base floodplain, your only options at that point would be Fannie, Freddie, and VA. Average cost of an elevation cert, $600, usually ranges from about $500 to $1,000. Again, it's very important that you have this conversation with a borrower prior to originating this file. I mean, there's nothing worse in the middle of a transaction because, us as the investor, you've done a lot of work before that loan even gets to us. Now we're to the point where we're in underwriting. We've underwrote the file, and now we received an appraisal or a flood cert telling us the loan's in the property's in a flood zone, or the appraisal tells us that it's missing either the exterior HUD labels, the interior compliance cert. Now you have to go back, Mr. Borrower. I'm sorry I didn't talk to you about this, but this is going to cost you an extra $600, $700, $800, $900, and that's always a tough conversation. So having that conversation in the very beginning is so important. All right, this is an elevation cert. This is what it's going to look like. It's going to have B9. It's always going to be the base flood elevation. And then you're going to compare it to a couple of the items in the C, C2A, D, E, and only H if it's structural is involved. So very simple. All right, so this is for the title company. So again, you've already had that initial conversation with the title company. Hopefully they understand everything that happens on a title, especially once that loan has closed. The biggest thing is the manufactured home endorsements. So the title company does all their work. They're filing all the correct paperwork with the state. And the end product that tells us that everything's been done in a workmanlike manner and meets states and federal requirements is this endorsement on title. So the manufactured home endorsement in all states outside of Texas is the ALTA 7. So it's a 7.1 or the 7.1-06. And in Texas, the manufactured home endorsement is the T31. So these are going to be on every single transaction where the manufactured home is the subject property type. So what these endorsements tell us is the owner of the land owns the manufactured home. The manufactured home is on the land, and that the manufactured home is titled as real property or will be titled as real property after closing. So it's very important. You will need this ALTA 7. And what we'll accept is a lot of title companies put these manufactured home endorsements on the prelim title policy we use to clear the file, or some won't put it on and they'll tell us it'll be on the final policy. Both are okay, because we know all that work's going to be done at detitling a mobile home after closing. And the cost is very reasonable, anywhere from $50 to $100. So again, I hope you guys, I know I was talking fast. I know you guys are ready for your questions. I hope this is going to help you, be the quarterback of that transaction and be the driving force in that transaction.
Awesome. Well, thank you so much, Nick and Chris. And we are going to jump into the questions. So please, if you guys have questions out there, please type them in. But before we jump to those questions, and as everyone is gathering them, I just want to recap a couple of things from an origination standpoint. Now, if you listen to the stories between Nick and Chris, both of them said, when I was originating, I was in a market where there were manufactured homes, and I became an expert that allowed me to build a community surrounding that. Now, I know all of you out there, for my originators that are currently listening to this, we're always looking for ways to become specialists and experts within the communities that we serve. And becoming an expert in manufactured housing is an excellent way for you to market yourself. So that's why what we look to do today, as Chris and Nick went through all of this, is to prepare you with what those initial questions are when you have that interest. So the first recommendation I would say is learn this and then use it to make yourself that expert, but then really dive in to know those initial conversations, because no one wants to be surprised with, no one told me about that, that I need that cost. So definitely do that. But manufactured housing, as Chris had mentioned, we know there is a shortage in inventory. And manufactured housing is actually filling a very great need within our country. So this is a wonderful product it's actually, as Chris has said, we love this particular transaction because we see the value that it's providing to the families out there to be able to get into a cost-effective property. Okay, so the first question, Chris, is actually going back to the appraisal, okay? So the question was, is the rush fee part of the APR?
That's a good question. I'd have to look and see if it's no, because it will not be part of the APR.
Okay.
Yeah.
Okay, then the next question. The next question actually has to do with, it looks like maybe this particular client is working on a specific transaction, and they're trying to find out the exact date of the manufactured home. So the question is, there's no tag on the outside, no data plate on the outside, and there's been multiple remodels where everything was covered up. What should they do in that particular situation?
To try to gather as much information as you can. And we do run into this, periodically. And yes, that does make it challenging to get that IBTS report.
If I may, typically on the manufactured homes, it's usually the second I-beam from the bottom. It's one end on the bottom of the home will imprint the serial number. So actually the beam going across the bottom will actually have a serial number imprinted on it. So if someone's able to get underneath the home, they'll be able to pull the serial number, and then we'll be able to go backwards and look up and see when the home was actually manufactured.
Okay, and you can order the IBTS.
Yeah, because without the serial number, without any identifying information, you're going to be stuck. You're not going to be able to order anything. Sometimes you can reach out to IBTS and they may be able to pull it by address if they've done research on it already. Right. But if they haven't done research on it already, the serial number and the information on the home is in their system, but they're not going to be able to pull it by address. The only time they're going to be able to pull it by address is if they've already done a letter for that home. So the other option is to try to get the serial number, and it's imprinted on the I-beam. Now, depending on how old the home is or what's been done to the home, it may be harder than it sounds to actually get to that imprint, but it's there.
And maybe your town and local building department might have some information if everything was permitted at time of the home was placed on the property. I know this might turn into kind of a scavenger hunt type situation, but maybe they have the manufacturer's information and kind of start there, and you go on a trail until you can maybe possibly get some information on your specific unit.
Okay, so next question is, I hear that manufactured homes older than 20 years old have little chances of passing the engineering inspection. Have we seen that?
No, not at all.
I haven't seen that.
Yeah.
Yeah, the engineering cert is really just looking at the foundation, and these foundations of these manufactured homes, based on my experience, they hold up forever. I've never had never seen a manufactured home in my career that actually, failed an inspection based on, because if it was done right, it was done right. And there's no, I haven't seen any wear and tear type situations.
Going back to this beam question, Nick, okay. The question is serial number on the side with the tongue or the other side?
Oh, it shouldn't have a tongue, actually, because that is the hitch. That should have been removed.
Right.
And now, honestly, I've never been underneath one. I know they're there. I couldn't tell you exactly, but I know that someone has to go down there. They have to kind of crawl around and look and visually inspect. Like I said, it's usually the second beam from the end of the home. So it could be on either end. It depends on where the access is. So, if you go by Murphy's Law, it's probably the furthest beam away from the access point.
Yes.
Okay, so question about the homeowner's insurance, Chris. For the value of the manufactured home, does the replacement value appreciate for the replacement value? How does that work?
So when it comes to a manufactured home, it's really for insuring purposes, the replacement value really shouldn't come into play at all. So it's only, a true company that's insuring a manufactured home and understands the manufactured home understands that really legally they can't insure a manufactured home for more than what it's currently worth. So any lender or any investor can't require a borrower to be overinsured on the property. So and again, that's what the risky part is about, being an investor or a lender on a manufactured home, because yes, you are insuring this property for less than the loan amount most of the time. But really, it's just really the minimum requirement is what the home's currently worth, which includes that, that depreciation. I don't know if anybody's out there is familiar with the NADA report. NADA's got it's a very simple report you can pull based on some criteria on the home. It's going to give you all the values of the current home, which is going to include the depreciation.
Right, kind of like a blue book, right, for a car. Similar, right?
Yes, exactly.
Right. Okay, there is a question in regards to mobile home parks. So I'm not going to read the whole question, but can you go into, can we finance a home in a mobile home park?
Most of the time, no. Most of the time, no. That's the thing. There's going to be some situations where you will be able to, but it's rare. So just to kind of cover us properly, I would say that if you come across a situation, just check with someone at our company in particular, or reach out to your rep here, or reach out to one of us, and we'll kind of get a little more detailed. But most of the time, the answer is no.
Right.
Okay.
Yeah, and you guys review title, and title's held, fee simple or lease held. So again, another question to ask your, borrower, do they actually own the land, or do they pay ground rent? So another good question. Good question.
That is, that's a good one. Okay, so the next one is, would there be, going back to the beam, let's go, we're back underneath this manufactured home. You're underneath. Right. Would you see a serial number if it was before June 15th, 1976?
I don't know.
Would there actually be one?
There probably wouldn't be, because a lot of times the serial numbers are related to the HUD tags, and the HUD tags didn't exist before that. So more than likely, no.
Okay.
Yeah, that's my guess.
Okay. Let's see. For the value of the manufactured home, oh no, sorry, we got that one. All right, mobile home parks. Okay. If the seller's agent or the buyer's agent on the sellers does not have any of the documents that we just mentioned, can we go to the title company? Like, who would be the next if the realtors, both sides, they have no information in regards to this particular property? Where would they go to obtain that information?
Yeah, you'd start with the title, because if it was, if that loan, if there was ever a loan on that property, all that information would be recorded on title. So you can start at title. Absolutely.
That's a great idea. Good point. Okay, so this is similar to last time. We had this question, so definitely a good one to discuss again. What is the difference between a modular and a manufactured home?
I took that last time, so I guess I'll take it again.
Right.
So manufactured homes are built in a way so that they're in 1, 2, sometimes 3 sections, and the sections are made to be put on wheels on an axle and taken basically from the factory right to the location that way. Modular homes are components that are most of the components, whether it is 2 or more components, typically it's a lot more than 2, but 2 or more are made in the factory, but they're not made for transportation. They're made to be then assembled on site. So it's just the way that they're manufactured and the way they're manufactured to be delivered to the site. So with the modular home itself, they're made so that they're completed on site, and they're made in a way so that they actually are comparable and considered site-built homes. So they're manufactured, they're factory built, but they're still considered a site-built home for financing purposes.
Perfect. Okay. So we have one person expressing that he ran into a struggle when he went to do a manufactured home previously in his career, where the title was not retired. So, Chris, if you want to cover we can speak for ourselves of how we handle that at AFR. What happens if the title was not retired?
Right. So there's every lender's different. So how we handle it is we allow that title and all the paperwork to be filed at closing, after closing. So that title company would follow all the state's requirements for detitling that mobile home and titling that as real property, and all that paperwork can happen after closing. So there are a lot of lenders out there that require that to be done up front. I guess that's a little bit more of a conservative approach. And, through the years, of us doing manufactured homes for, 13 plus years, this has really worked well for us, and we haven't had any issues.
Yep. So great. Okay. Next question is it true that FHA guidelines on manufactured homes are stricter than conventional? If someone has good credit and wants to go conventional, what's the requirement for an engineer cert? Is it still required? And if it is, when?
Yeah, very good question. Oh, you want me to take that, Nick?
It's up to you. If you want it, you got it.
All right. So the difference between a engineer cert on FHA versus conventional. So conventional will really require the engineer cert or a certification from a state licensed qualified individual, certifying that only when there's a modification or addition done to the manufactured home. So if there was an addition or modification done to a manufactured home, this can be deck, steps, carport, anything like that, you are going to need that certification from a state licensed qualified individual. Most of the time that's going to be an engineer, is going to verify that the additions, modifications don't negatively impact the integrity of the structure.
Perfect.
Yeah, so if there's no comment in the on the appraisal on the modification section where it says any improvements, it's not going to be required to get any type of certification for conventional, whereas on the government side, it's always going to be required for the engineer cert specifically.
Correct. That's right. Okay, just to clarify, when specifically is the IBTS required?
So the IBTS is required when the appraiser marks on the appraisal that either the HUD cert labels or the compliance cert are not present at time of inspection. Now, if it's an FHA loan and one or the other is marked not present, the HUD cert letter covers you for both. if it's a conventional file and the HUD cert label is marked not present, you would be required to order the letter from ibts.org. If the compliance cert is not present, you would be required to order the duplicate compliance cert from ibts.org. So when one of those two are missing, you're always going to need, one of those items from the IBTS.
Got it. On an FHA loan, we always have issues with the well should be 75 feet from the well to the septic, and the well to the landline has to be 10. We've had to get surveyors go back to the property and remeasure. So any guidance on that?
Yeah, I mean, this is just I'm not sure if this is a manufactured home specific, but this is kind of a HUD guideline across the board specific. But yeah, maybe it comes up more on a manufactured home, and maybe doing a little research with the town to see if they have something on site, like some kind of old survey or something, where you can see going into the transaction whether you're going to need something additional when it comes to this. Again, like I always say, preparation is the key to life. Preparing to do a manufactured home transaction can be the difference of you receiving a ton of referrals versus not. But yeah, I think you start there with maybe the town building department to see if you can find something out, or if the borrower actually has something on a refinance transaction to some kind of older survey or something.
A question going back to the conventional engineer cert. So this particular individual said, do you, again, I guess it's an opinion question. On an opinion side, would you recommend kind of, guiding your client or your family you're working with to get one just for their own protection, for their own awareness? Like, I guess that's more of an opinion because we can advise from a guideline standpoint, but they're asking, what are your thoughts from an opinion standpoint?
So let me tell you, I want to tell you how much I love that question, because we're here to, we come to work every day and we're helping these families, and we're always focused on the minimum requirements. So this question is fantastic. So yes, my opinion is, you have the conversation with the borrower and you give her the option, you give them, him or her, the option of either ordering this engineer cert. And what an engineer is going to tell you is that, your foundation is sound, it's in place, you don't have broken cinder blocks under your, keeping your manufactured home up. So absolutely, I would pose that question to the borrower and let them make the determination if they want to pay the money to have the manufactured home foundation reviewed by an engineer. You can give them that option. But again, it's, that shows that's not a normal question from someone, because again, every day we're in this, we're running a million miles a minute, focusing on the minimum required we get done to get that loan into, to the closing table. And I love that question. Fantastic. Absolutely. I suggest giving your borrowers the option.
Let them make the decision, right? Okay, awesome. Okay, so if the home is not on a permanent foundation, can we do a renovation loan for the foundation, Nick?
Absolutely not. If the home is not on a permanent foundation at the time of closing, we can't close the loan, basically. So we allow renovation loans for manufactured homes, but on a manufactured home renovation loan, structural items are not allowed. And obviously the foundation is structural. Even if it's something as simple as just adding tie downs or an anchor to complete the foundation system, it's still not allowed. It has to be done prior to our loan closing.
Great. And that is a good point. We do permit renovation loans as long as it's not structural on manufactured homes. A lot of times people think you can't do that. You can, if they want to upgrade the kitchen, the bedroom, that type of thing. Of course, we're happy to provide that. So that's good. All right, Chris, what about timing of the ordering of the engineer certificate? Where in the process did you do that?
It's really, gauge the strength of your loan. Obviously, you never want a borrower to shell out money for an engineer cert if somehow, if you think the deal might not go through. But, as early on as early on in the process as possible, when you're confident that you have a strong deal, and, I would order that engineer cert. especially if, obviously in government transaction, you're going to need it all the time.
Great.
From my own experience, from when I was originating, I really had to look at the individual that I was helping. And like Chris said, the strength of that loan. So if you're very confident on the value, you're very confident on, having a good loan that can close, do it up front when you're doing the appraisal. Now, if you have a borrower who may be financially challenged, that it's going to incur a significant cost, and maybe you're not positive that the value is going to come in, and you have time to meet your closing date, you can actually stagger it out and wait. So it's really based on the individual that you're helping and the loan scenario that you're working on. So
yeah, and a very good point, Nick. I know these appraisals and the engineer cert, you're going to pay these outside of closing. But just know, if you are negotiating a purchase contract with the seller, these fees paid outside of closing can be applied to the seller concession at closing if you have additional money left over when all the borrower's fees are paid, the fees that they're paying at closing. So again, just something a little different.
Great. And the next question is, Nick, can you finance a property with 2 manufactured homes on?
The short answer is no, but there, in certain situations, if it's on the FHA side, and you have one of the properties either completely decommissioned, so meaning that it doesn't have any real utilities other than lighting to it, like the bathroom, the kitchen's removed and it's used for storage, that's allowed. In other situations where it was a permitted accessory dwelling, and there's a distinct difference between the main home and the accessory, it's allowed. But in most cases, the answer is no. It's just, it starts to get into that fine area where sometimes it is and sometimes it isn't, but it's very case specific. So.
Yeah, in my career, I've never actually seen a legal accessory unit meet all the requirements to, like Nick just mentioned, to have a second manufactured home. Like you said, it's got to be the same address, same utilities, same everything, a legal accessory unit. I've just actually never seen one in my career that actually.
I've actually had a couple, so not many, but a couple.
Yeah, it's very finite. That's true.
Yeah.
In regards to the engineering cert, is there an expiration date, Chris? How long is an engineer cert good for?
No, we allow engineer certs from going back 5 years with the statement of no modifications or additions from that point. So proof that there's been no modifications or additions to the manufactured home within that 5 years. We will go back as far as 5 years.
Okay, what about, can it be transferred? So let's say the Lackerman family is going through and unfortunately you weren't able to qualify for the loan, and now the D'Amelia family would like to use that engineer cert. Can it be transferred?
Yes, absolutely. Very good question. It, what we're looking for in a manufactured home is the address. Very different from the, appraisal requirements. So as long as the engineer cert tied to our property address, yes, absolutely can be used.
Okay, next question is it possible to do a loan on a manufactured home with a 99-year leasehold? They do not own the land. It's a retirement community.
Yeah, because that's I would consider that as a park, a manufactured home park. So yeah, it's, you're probably not. The odds of that being an approved development are very slim, my guess is, but just on the surface, I would have to say, no, you wouldn't be able to.
Okay. How about a modular and a manufactured on one property? So one modular, one manufactured, one property.
It's pretty rare, but again, we have to fit the criteria for an accessory dwelling at that point. So the modular, I would assume, would be the main dwelling, and then the manufacturer would be the accessory, and it still has to meet all the criteria. So on the conventional side, typically for that setup, the accessory has to be half or less the square footage of the main home, and then, like Chris saying it has to be on the same utilities, it's the same address. So there's a lot of pieces that go along with that. And the same with FHA, where they don't have the specifics about the size of the second home, but it does have to be, the main home has to be superior in size and in appearance to the secondary or the accessory dwelling. And with manufactured homes in general, none of those homes can be income producing. So if they have it classified as an accessory and the state allows you to collect rental income from it, if that was used as a rental, it's not eligible for financing.
Correct. Correct. Wow. We made it through all the questions. That was awesome. I mean, to everyone out there in the audience, kudos to all of you for the engagement and all of those questions. And Chris and Nick, thank you so much for going through that speed round there. That was pretty amazing. Okay, and the final question, then, the most popular question that was asked is, will this presentation and recording be posted? And the answer to that is yes, it will be. You will find it in the AFR Resource Center. So if you would like any other team members to review it, or if you would like to go over it again and review the PowerPoint presentation, by all means, please do so. Remember that we are here to make you an expert so that you can be a trusted advisor for your community. And we want you to always look good and know the proper questions to ask. Thank you all for joining us today. You have been fabulous, from our presenters to our audience, and we wish you a wonderful day, a happy Thanksgiving, and stay well, everyone.
Thanks, everyone.
Bye, everybody. Thank you.
All right.
Wait,
that's pretty good. Yeah. Hi.
That was great, guys. Is Chris there? Oh, we lost
Chris. Ran away.
All right, guys, hopefully you found some benefit out of that. If you're thinking about buying a manufactured home or know anyone that's considering buying a manufactured home, there was a lot of really good information that was covered on this webinar. Feel free to direct message me, drop a comment, share the webinar. Some good information that was shared about everything you need to know about manufactured homes. Again, Steve for Home Loan. Let me know if you got questions. Thanks so much. Have a good day.